You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Because there's a better discipline with CEOs, and more of the industry as a whole are throwing off free cash flow, and that's stupid acquisitions. And so I see that you're going to see more generalists coming in. These CEOs are starting to show rational thinking and respecting shareholders' expectations of rising gold. They're going to get a rising dividend. So we know that half of the S&P performance is rising dividends, growth in dividends along with capital appreciation. And the gold stocks are in that sweet spot for the secular boom move in gold.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. Today's show is brought to you by Lumina Gold Corp. Lumina Gold Corp is advancing a 17 million ounce gold deposit in Ecuador. This project is a worldwide top 15 gold development project. Ross Beatty owns 20% of Lumina Gold, and it's led by the excellent Lumina Group management team. To learn more, go to luminagold.com. The ticker symbol in Toronto is LUM, and on the OTC, you can find it trading under the ticker LMGDF. Well, my guest today is Frank Holmes, very popular guest in the precious metals and mining sector. He is the CEO and Chief Investment Officer of U.S. Global Investors, where he has been there since 1989, and he's been leading that company. So Frank, thank you for coming on the show today, and I'd like to get your thoughts first on gold. I heard you recently say on a CNBC interview that gold is going to 4,000, which would be a double from where we're at now. What type of time frame are you anticipating for that type of move?
I think it's going to, the history of, as a case study would be from 2008-9, the bottom. 3 years later, gold went from 800, 700, 800 range to 1900. So we take a look at the Federal Reserve's expansionary balance sheet. The magnitude was 3 trillion back in 08-09. It's now pushing 10 trillion. So I was forecasting 3 years out from now, gold could easily be at 4,000.
Many are talking about this as a generational move in gold. Would you agree that the economic situation seems to indicate that?
Absolutely.
You've been pointing out the 50-day moving average, how it's been trading above the 200-day moving average, that golden cross that traders look to. What happens if that 50-day moving average moves below the 200 moving day average? Would that affect the way you invest or trade in the gold sector at all?
Well, historically, they call that the death cross. And what I've tried to do is I have it on YouTube. I explain it in a 2-minute clip. And basically, big institutions we could see, and hedge funds, billionaire hedge funds, all of a sudden, all through last year, were recommending gold. And you see them just feel more confident to do that. And you also see larger pension funds, et cetera, slowly move when you start seeing this trend of the 50 days above the 200-day.
When you were interviewed on CNBC, the other gentleman that was engaging your views on gold, he seemed to indicate that it's simple as coming up with a vaccine for the COVID pandemic, and this could potentially inflate the economy and crush gold's run. What are your thoughts here?
I think he's so off base. I think it'll make jets take off. If they come with a vaccine, like you, I've flown once in 6 months. You've just flown. The airlines business would then turn and boom because people are still afraid. The airports are pretty empty. Planes are much cleaner, but they're quite empty. That the vaccine will be a big boom to hotel stocks, hotel ETFs, and airlines.
Would you be one that could see gold rising with a sustained rise in the general equities over this 3-year period of time?
Yes, and that's what makes me very bullish on the gold stocks, because there's a better discipline with CEOs, and more of the industry as a whole are throwing off free cash flow, and that's stupid acquisitions. And so I see that you're going to see more generalists coming in, like we had, Bill, on the last big stock cycle. Was 2002 to 2007, gold stocks far outperformed bullion, far outperformed. And so you can have this gold rally, and we could have these gold stocks rip like we're seeing Barrick today.
And Barrick's ripping on the heels of the news that Warren Buffett took a position. What do you think's going on here with Warren Buffett?
Well, he's turning 90 in a couple of weeks, so his whole paradigm and view in the world at his age, if you catch the coronavirus at his age, it's tough to survive. And so I think he became fearful of the airlines. He's fearful of all this money printing. And he's quite often said that he doesn't like gold itself because it doesn't produce anything, but he likes now gold companies. And I think that's because what we just talked about, these CEOs are starting to show rational thinking and respecting shareholders' expectations of rising gold. They're going to get a rising dividend. So we know that half of the S&P performance is rising dividends, growth in dividends along with capital appreciation. And the gold stocks are in that sweet spot for the secular boom move in gold.
I've talked to many gold stock fund managers who have articulated to me that they don't want to see dividends on a lot of the major gold producers increase too quickly. They would rather see that money reinvested in production growth or acquisition. What would you like to see?
The only problem that history is, this is just history. The history is that 95% of these M&A jobs dilute the revenue per share, dilute the cash flow per share, and the reserves per share. So yes, the entity has a bigger set of financials saying revenue and cash flow, but on a per share basis, it's diluted. So those stocks underperform. So there's very few acquisitions where they're actually accretive. So that's why I'm such a second guesser with it. And I think that they just have to not just grow for the sake of growth because their track record sucks. I've been through so many cycles. This track record is deplorable. And investment bankers running around for their 6% fees because there's no money in trading stocks on a commission basis, just try to force everything into these companies, and they don't work.
You created a gold ETF called GOAU, the U.S. Global Gold and Precious Metals Miner. How does this ETF compare to GDXJ? What's your advantage?
Well, we have a much smaller number of names. Two, we picked the names. One is 30% of the portfolio are royalty companies. 70% are actively repositioned every quarter based on market cap down to 200 million. It's a very dynamic portfolio structure in addition to spending 8,000 hours of backtesting of looking for those factors that help drive stock prices. So if you look at the great success of Kirkland Lake, not now, but going back 4 years, you'll see that run for 3 years, it had the highest revenue per share growth. And we know that if you have strong revenue and cash flow, that the non-gold fund managers buy your stock too. Because you qualify at that growth category, like a technology stock. And so we're very focused on those companies that are very inexpensive on an EBITDA to cash flow basis, to their enterprise value, or we're looking for that momentum. And once a company does something, stub their toe, that they're not in those top 25 names of strong free cash flow, strong revenue per share growth, then we kick them out. And we also look for how smart management is. If they have to be in that top half of cash flow returns on invested capital. If they do anything to destroy that, we don't listen to their story. They're gone, Bill. And they must reset that button every quarter to see how they're managing relative to their peers.
And what type of inflows have you been seeing in the past 6 months? Have you been seeing the millennial Robinhood traders or smart money? I mean, what type of money has been flowing into this ETF?
Smart money was early, like I call really smart early. And then we started to see institutions coming in that are other fund managers and they didn't want to start trying to pick the gold stocks, but they like that it's a discipline. It's not just buying market cap. When your listeners go and buy GDX or GDXJ, there's money going into bad stocks and good stocks. What we're doing is saying, no, we only want the stocks with the strongest fundamental factors. And we're agnostic to the narrative that it's a great project, it's got a problem, it'll turn around. We don't want to buy it until it is turned around. And so we think that that's a real key factor for success. So what happened with that is we started seeing the millennials coming into it through the Robinhoods. You can see just a beautiful growth as it's been rising through it. But we've also had 321 Gold. We've had Kitco, people coming in through those, clicking through those type of venues, interested in something that's sort of more intelligent, what's called a smart beta 2.0 to pick these gold stocks.
Frank, how do you play the volatility in your own personal investing and at U.S. global investors, the volatility in a gold and silver bull market?
I write about it often. If you visit the website at usfunds.com, there's a section there that talks about managing expectations. And as Warren Buffett had the great line, he said, if you want to have a long-lasting marriage, have low expectations. And therefore, everything is on the upside. But the point is that I'm trying to help people understand the DNA of volatility. And I go through and I talk about this in more explicit detail, that every asset class has its own DNA of volatility. And you must recognize that before you jump into buying them. So, in fact, most of those talking heads are anti-gold on CNBC. The DNA of volatility of gold is exactly the same as the S&P 500. At 1%, 70% of the time, it's a non-event to go up or down 1%. Over 10 days, up or down 3%. Now, both S&P and gold are the same, but gold stocks are 2 to 1. And if you go to Bitcoin, it's 5 to 1. So the daily volatility for Bitcoin is 5%. We look at gold, it's 1%. So once you understand that volatility and you get these 2 standard deviation moves where it has this big move, and I like to use 60 trading days, then I like to take profits. And anytime it falls back to the mean, then I like to buy more. And those volatility swings in gold are sigma's about 6%. So a 2 sigma would be 12%. And for gold stocks, they've been known many times to correct 25%, and then they rip to new highs.
Are you still bullish on cryptocurrencies?
I am. This whole money printing is just unprecedented. I see that China just threw another $100 billion into their economy for money printing. 2 weeks ago, Europe with a green bond issue was $800 billion to spend money to create jobs, economy, but it has to be green oriented.
Frank, you're in America now, but you're originally from Canada. Do you think that physical gold confiscation is a possibility in this country?
Oh, who knows? I never really got paranoid over it that way. So I've always recommended people they want to own gold, buy 24 karat gold jewelry. And remember that Indian women wear, they wear something like 4 times the amount of gold that's in Fort Knox. It's called the Great Love Trade. And you get to wear your gold. And Monet is a site that you can buy 24 karat gold jewelry, just like on Amazon. And they'll also buy it back from you at a small markup at any price. So that's one place. The other one is to buy quality gold stocks. So having a 10% weighting in gold is just prudent and wise. And if you're going to, and I know when they went to confiscate gold last time, it was predominantly just wafers of gold. So if you have numismatics, they're not going to take that. And if you have 24 karat gold jewelry, they're not going to take that. So that's one way to play that concern.
What type of junior gold stocks have you been investing in? Are you able to share any information there?
Well, there's some explorers we've been participating in, and probably, the cheapest stocks out there is called Grand Columbia, GCM. And in our model of all the gold producers out there, it has number one highest free cash flow yield of 15%. It's the cheapest cash flow multiple and is number 5 ranked out of all the 100 gold producers, or 75 that you can buy easily in North America. It is ranked number 5. So that means it has the highest cash flow returns on invested capital. And so stocks like that, I love. And who used to have a big position in it was Sprott. And so Sprott's traded out of that position and going to more speculative stocks. I'd rather own a stock like that because you're seeing the Chinese roaming through Latin America. They bought another gold mine from Newmont Continental. And I think that they're going to take a look at, they spent something like commitment of $7 billion to build a subway system in Bogota, a super train railway from Medellin to the Pacific, and they bought a gold mine. So this would be an operating gold mine. It's the biggest in Latin America, in Colombia. So I think things like that are easy to take out, and the stock trades at 6.5, probably worth $12 on a relative basis.
Are you deploying any cash into the base metal miners?
I love copper gold porphyries. I think that's my favorite. So you get gold and you get copper, and that's been the conversation regarding when you buy Newmont and you buy Barrick, you're also getting copper. And if you're worried about the coronavirus and coronaviruses, other viruses, they don't live on gold. They can't live on gold, silver, or copper.
But are you bullish on just some of the other base metals like zinc?
No, not as much. No, it's zinc. You need cars. You have to get the car industry turning.
You mentioned the JETS ETF earlier. I'd like to go back to that. Like you referenced, we both went on an airplane recently, and at Detroit International when I went through, that was the first time ever where I walked right up to the TSA agent, and they screened me right through with literally not waiting in a line at all. And then when I flew into Denver, United had their planes literally parked on the taxi runway, unused 737s. What type of time frame do you think is this airline trade? What should we be anticipating here?
It's a great question, Bill, because I was wondering, where all these millennials are coming in, and we have incredible flows. We had a record at the end of February, going into March. The ETF analyst Balkunis, Eric, with Bloomberg, called up and did a TV interview, and he said the three cheapest ETFs in the world is Nigeria, coal, and jets. Why jets? I know why I don't like Nigeria or coal. And it was pretty funny. And that thing ran all weekend globally. And we started seeing these flows coming in. And a lot of institutions that wanted to short, hedgies wanted to short American Airlines. And their balance was to put $10 million into jets and short $10 million with the airline stocks individually that had the worst balance sheet. So we saw that trade, but we saw these millennials coming and coming. It was unprecedented. That all of a sudden we had 20,000 names where they were so patient in buying all through March, April, and May. Buffett comes out with his negative story, and a week after that, they take off 50%. So during that process, I started inquiring, and I find out that the majority of them learned, they've been stuck, they've been locked up, and they knew a lot about flying. They knew the best airplanes to fly, the cheapest tickets to fly. They loved experiences, so they would fly all over the country to enjoy themselves. That's what they did with their disposable income. And all of a sudden, the checks they got from Trump went into the stock market, 70% of those funds. They became day traders. They started using the internet to research. And guys are coming back saying that the majority of them use podcasts and YouTube to learn, and that they understood previous big swings, such as 9/11. The airlines shut down around the world for a week. They came back. 6 months later, they're up 80%. SARS comes out. They collapse in Asia. 6 months later, they're up 120%. 2008, 2009, Obama comes in, and in March of 2009, he starts inject $700 billion into the economy, and 6 months later, the airlines are up 80%. So they're all betting that you're going to get this swing move, a macro swing move, and they jumped something like almost 57% in the first big surge.
So would the first headline that speculators listening to us, if you see something related to the vaccine or hydroxychloroquine is the solution, a headline like that, jets would be a good speculation potentially on the rebound of the airline industry?
Huge.
Any other asset classes before you go, Frank, that you're looking at that you'd like to share with my listeners?
Like, I love those stocks when they make an announcement and track. They're hiring people. When they're hiring people, that's a great first mover advantage of something's happening there. And you can see with Chipotle in the restaurant business, they had a superior delivery model. They hired 10,000 people because they had to fulfill their obligations to their customers. And California Kitchen goes bankrupt. Big stocks. Home Depot. Those, I've been noticing that, and we own it because their parking lots were full all during the lockdown, and everyone's renovating. So I think you got to look at Peter Lynch's great book, One Up on Wall Street, is try to keep your eyes open to look where people are going, look where money's being spent. And you can see that in those industries. So Amazon said in March they're going to hire 100,000 people. Well, that was a precursor to them all of a sudden exploding during the lockdown. So I think for investors, it's just use your common sense to see where money's going.
And Frank, as we conclude, what can investors find at usfunds.com?
Well, we've won 88 awards for educational information. So we have rich content on the history of markets, the volatility, and really they should look up the information on Purchasing Manufacturers Index, PMI. It's a great leading indicator for commodity demand. When China went above the 1 month, above 3 months, several months ago, oil bottomed and took off. The correlation is so high. And it's a great precursor to understand forward looking.
Excellent. The website again is usfunds.com. You've been listening to Frank Holmes, the CEO and Chief Investment Officer. Frank, thanks for coming on today's show.
And good luck to you, and happy investing to all your subscribers.